Good morning, ladies and gentlemen. Greg McCloskey from ForexLive.com. I'm going to kickstart your trading day for September 19th, 2023 with a look at some of the major currency pairs. So let's get going. Taking a look at the euro versus the US dollar on a hourly chart, we came up and tested the 100-hour moving average in trading yesterday, and also in the Asian session moved a little bit above it, but then rotated back to the downside. However, that momentum to the downside could not be sustained, and we started to trade above and below the falling 100-hour moving average during the European session before moving to the upside and away from that moving average level. We also are trading now above the 200-hour moving average. That level comes in at 1.07044. That level also corresponds with this line here that I had in play at that level, indicative of a support-ish type area and resistance area at that level. You can see all the number of different swing lows and swing highs through here. Sort of gotten above and below it through here, but found support against it here and here before moving to the downside and trading here today. We are starting to move back above both the 200-hour moving average and that swing area at that 1.0704 level. So the bias is more to the upside above that level as we start the U.S. North American session, and we'll see if that momentum can continue. If so, we would expect that over time we'd see the price move up toward the 38.2% retracement at 1.07510. We are seeing lower, little mixed U.S. yields in trading here today, which is something different, I guess. They've been moving more to the upside with many parts of the yield curve in the U.S. Moving to new highs as we head into that FOMC rate decision, even though the Fed is expected to keep rates unchanged. The question is, will they target another tightening going into the year end? We will see. So euro moving higher, dollar moving lower, even into that decision. We'll see if the price can stay above the 200-hour moving average trading here today. Let's take a look at the dollar versus yen next, and again we'll talk to the hourly chart. Why? Because there's some levels in play, including the 100-hour moving average in the Asian session. The price moved lower and tested that 100-hour moving average. I've only just find support buyers against that level. The price moved higher, and we did extend above this swing area through here. But only briefly and only by a small amount. You can see the price moved above it here. Actually, it might be that we could move that swing area up a little bit, in which case we tested the high prices from over here and wrote ahead of the extreme prices that we saw in last week's trading that moved up to the 147.95-ish type area and found sellers, and sellers. 4 different hourly bars where the market sold against that level. Maybe it's against the 148 level. What we do know is that it would have to get above that level and then above the 148 level. These are highs going back to last year, by the way, so to increase the bullish bias, but we did find the sellers, and that sellers took the price right back down to the 100-hour moving average, where again we found support buyers at 147.54. So this area right through here is still resistance, and the 100-hour moving averages still support. Those levels will be determined either more bullish above that level or more bearish below that level. We will see. On the downside, we have the 200-hour moving average. On the upside, as mentioned, we would be trading at the highest level going back to these dates right here, which is November 2022. On the top side, 148.81 would be the next target, and then above that we have this upside upside trend line here that comes in at 149.75. So get above the ceiling opens the door for further upside potential in the dollar versus yen. The sterling versus US dollar on the hourly chart. Finally, the market, well, not finally, but the market, I guess finally, we found this bottom here at 123.69 level both yesterday and again today. The sellers couldn't get below that level or much below that level, and the price started to rotate to the upside over the last few hours of trading during the European session. And as we start the U.S. North American session, we are testing the 100-hour moving average at 124.21. Last week we did move above that level on a few different occasions, hit through here and even through here, right here. So there is some precedence of getting above the 100-hour moving average. There isn't any precedence of getting over the 200-hour moving average, going all the way back to this day right here, which is back on, well, what day is that? That would be on September 1st. So All month we've been below the 200-hour moving average. We'd have to get above that level to increase the bullish bias. In between the 100 and 200-hour moving average sits this other green line. This green overlay line represents the 200-day moving average. And going back to last, Wednesday, the price came down to the 200-day moving average and bounced off it. On Thursday, the price fell below that level. On Friday, the price was able to move above that level but stay within this swing area. So 200-hour moving average, swing area, 200-day moving average, swing area, 200-hour moving average are the targets here for the sterling versus US dollar if the bias is going to continue to the upside. But right now, we are testing the 100-hour moving average at 124.21. There may be resistance against that level too. So if you're a seller, this is an area that you want to sell against. Probably don't want to see the price move above the 200-day moving average nor the 200-hour moving average. Just keep that in mind. So there you have it. A look at some of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.